Today we're talking about money and what are the 4 bank accounts your business needs to be profitable and run smoothly. Here we go. And welcome back to REI Simplified, where we break down complex real estate situations, scenarios, and lingo for people like me and you, the beginning investor. Today we're talking about money and talking about the 4 bank accounts your business needs so you guys can be profitable and run smoothly, have money for taxes, but most of all, have money to put in your pocket to be profitable. So about a few months ago, I read a book called Profit First by Mike Michalowicz. I hope I'm saying his name right. The book changed my mind, changed my life, changed the way we do banking, the way we do QuickBooks, the way we do, way we look at our numbers all around. So what his book, the premise is exactly what he says, profit first. Too often, business owners, they have money coming in, which is their gross income. They have expenses going out, and then they have what's left over is considered their net income, their net profit. So the problem with that is, the way Mike breaks down into his book is that he talks about having like a big platter of food. If you have a huge platter and you put tons of food on there, you eat all the food. However, if you have a smaller platter, you can't eat all that food. The premise is, instead of having all of your money coming into one checking account, one business checking account, and having the access to all that money at one time, therein lies the problem. So what he talks about is having money coming in and then immediately putting money in different accounts for different purposes. And you can't touch that money if it's not for that purpose. So here's what we've done. And it has worked out and we are profitable. We have money for taxes. We have money for savings. It is a beautiful thing. Before I read his book, that is not the case. We hoped to have enough money for taxes April 15th. And that's a shame to be in business for 4 years at the time and not have, that part already outlined for your business. It's kind of scary as well, but also I was more ashamed that I didn't know and didn't have that money set aside. So moving forward, starting probably about 9 months ago, and for the rest of our business lives and personal lives, we have now divvied up our incoming money into specific types of accounts for specific purposes. So let's get right into it, guys. Here's how we run our business, and it's worked for us, and how we do our banking. And if it works for you, great, fantastic. I hope, shoot me a message, give me a comment a year from now when you're now profitable and you have tax money, so on and so forth. So first thing first, guys, money comes in. What we do is money comes into our big operations account. That's our big checking account for all of our business operations. From that operations account, I immediately send money to what I call my profit account, also to my tax account, and also to my savings account, because I have a lot of residential properties. So like their rental deposits and other savings money goes into that account. So why is that important? Let's use hypothetical numbers. Let's say I have a few houses. Let's say that my income is $10,000 a month, right? And let's say that my expenses are $6,000 a month. Well, most people, that other $4,000, they just blow through it because it's there. But let's look at it a little bit differently. Let's say I got $10,000 coming in, my expenses are $6,000, but I immediately take $1,000 to put towards taxes. I put $1,000 to put towards my profit, and I put $1,000 to put into savings for that rainy day fund or the unforeseen. That right there, if I don't have the money anymore, I can't touch it, I can't use it, I can't spend it. That's the big thing, is I cannot spend that money because it already has, it's already been earmarked for a specific purpose. So when money comes into us, every time money comes in from every check or whatever it is, from every tenant paying, every Airbnb payout, every direct booking payout, we take X amount of percentage to operations. We put X amount of percentage towards profit, towards savings, and towards taxes. Super important. So he talks in his book, Mike Michalowicz, that you don't just start being profitable, super profitable on day one. Every business owner can put aside 1%. You start with 1%. Now this is profit. This isn't you paying yourself, because you paying yourself is part of your expenses. We're talking about a surplus of money here, not you paying yourself. So if I pay myself $3,000 a month, but I want my business to at least be profitable of, let's say, $24,000 a year. That's profit that we can put towards another investment, another property, pay off debt, whatever we feel like doing with that money. I have to create that surplus, that profitable amount within the business. It's not just gonna magically show up. So without getting down the rabbit hole, you need an operations account, money coming in and your expenses to go out. You need a tax account. Get with your CPA, have a good estimate of what your yearly taxes are. Divide that by 12. You know what your monthly savings should be for taxes. And then however your business is set up. If you get paid weekly, if you get paid bi-weekly, whatever your business setup is, take your percentages to equal that monthly tax savings. Same thing for your savings account or rental deposit account, wherever you have. Again, if you know that your 3 months of expenses is $30,000, for example, and you can plan for in 3 years, I'm gonna save up $30,000 for expenses. I can do my math of what monthly I need to be grabbing from my operations account to put into my savings account so that 3 years from now, I have that 3 months worth of savings for that rainy day. But the most important account in your business is your profit account. And that's what no one talks about. If your business is not profitable, then you're just on a treadmill going nowhere. You've got to create profitability. The first 3 or 4 years were not profitable because we didn't know how to do this. We had money, we paid everybody, we never missed a bill, but also we spent money that we probably should have set aside to grow the business. Now, I've never been frivolous? I've never been a frivolous spender. I'm very, very smart with my money, but I didn't purposely put that money aside. So I encourage you to take 1 or 2% of your gross income. Some people make some gross, $500,000 a year through a business. Now, if you're a business owner like most people watching this channel, you know that's not profit. But that's still $5,000 a year profit if you take 1% of 500,000. So don't get wrapped around the numbers so much as you are the percentages. But please read that book. I'm gonna leave a link to his book, Profit First, Michael Michalowicz, in the description. Please realize that you need more than one account, and this is for your personal as well. I was in the Army for a long time. I made a good amount of money being in Special Forces, Green Beret, and all the extra pays that we got. I wish back then I had done something similar to this, even as in my personal life. So chop up what you're doing, put money in certain places, give that money a specific purpose, let it do its job, continue to grow, and most of all, continue to be profitable as a business owner. I hope you guys got something out of this. Please, if you did, like, subscribe. It helps the channel. It helps us get in front of more people. Share with a buddy. Why not? It's free. My name is Adam Johnson. It's been a pleasure. We'll see you guys on the next video. Later.